Morning all. How are we all doing? So, just got back from the gym again. Was a hot, sweaty mess on a Thursday. How are we doing? Diamond, morning. Berlino, Sean. Everybody hear me? Yes. Mic working, video working. Fingers crossed. Carries on working this morning. Stupid internet and stuff. How are we doing? Got into not so much a squeeze, but US dollar's not really got any recovery from yesterday. We'll have a look at everything's in a minute and see how everything's going, but nothing much moving this week, is it? Very, very flat. Morning, Stevie. Morning, Frederick. Morning, John. So just to cover news first. News today is the biggie. We've got the pound interest rate today. This is going to be the highest interest rate for 15 years in the UK. So it's a big, bold move by the Bank of England. And obviously it's in the news at the moment. So we'll get probably a fairly big move off of the pound today. Seems to be a bit of movement going on at the moment. Pound US dollar. I'm just looking at one of my positions on pound US dollar. It's just gone into profit. So that is at 12 o'clock today. So that is your main news today, is the bank rate. So when the rate comes out at 12 o'clock, we will get either a big strong move up, big strong move down, or a whipsaw. And then at 12:30, it's Bailey speaking. He will there give forward guidance as to what they're going to do for the next month, quarter, moving forward, hopefully. And that's when you'll tend to get your move start. So the first half an hour of the move tends to be the whipsaw. It's exactly the same as FOMC. The movement happens after the press conference because the market is already priced in the 4.5 interest rate rise. So the only difference you'll have is if we get a 4.75 or, God forbid, a 4.25, if we get a 4.75, you're going to get a massive move and a sustained move. But they will be waiting for 12:30. So that's when the move's going to come. And then we could easily see 200, 300 ADR today off of the pound. Then this afternoon, an hour afterwards, we've got the PPI figures for the US and the unemployment claims. So again, more manipulation on the US dollar, more potential movement on the US dollar. The news, I think, on the US we're going to find is going to start to become a lot less impactful moving forward because the Fed of near as damn it said that is it, terminal rate is in. So the market will be less inclined to think that CPI and PPI figures are going to have an impact going forward on interest rates. So I think we're going to see a little bit less impact on this. Unemployment and things like that are going to stop affecting the interest rate rises. So it's all going to start becoming about defaulting on debt for the US. So that's your news today. So today is the news. Today is the big news day. And then tomorrow we got GDP for the pound as well. We got the inflation tomorrow morning for New Zealand as well. And then Michigan tomorrow afternoon. So that's your news there. Overnight news. Not a lot that I could see. We had the CPI figures for China, but it doesn't really affect us. Credit Suisse CDS surges, hedge funds see potential trigger. So there was a bit of Bank of Japan news. Just going back a little bit further just to see if there's anything last night, because I didn't look at last night. So the April meeting summary of options. We must continue the current easing policy given uncertainty over global outlook. So again, they've got their finger on the trigger to bolster the yen. So slightly bullish speak on the yen. Closely watching the outcome of the Bank of Japan's bond market as YCC is causing distortion in smooth finance. Not quite sure about that. There's no need to modify YCC with improvements to the curve. So basically, nothing particularly exciting there. What I'm always interested in watching is anything they mention about the currency exchange rates, because when they start talking about the currency exchange rates, that's usually an indication they're going to start an intervention or anything to do with interest rates again, because they said they're going to increase those, but not potentially at some point in the next year to year and a half, which gives us absolutely no forward guidance at all. Morning, Baggy. Morning, Steve. Everything's working good? Yes. Finally. Morning, Kenley. Morning, Brian. Morning, Bella. Morning, Neo. Morning, It's Time. Morning, Virginia. How are we all doing? So just morning, David, as well. Quick recap of yesterday. So this is H1 hedging set file. Banked 0.77 yesterday, banked 0.67 today, up to 13.25 for the month, sitting in 9.860D. H4 banked 0.3 yesterday, 0.28%. Lost 0.3 today on drawdown control. There's the only thing here is this Euro New Zealand. This has been in a little bit of a squeeze now for a week or so. I'm looking at the Euro New Zealand this morning. We've got a very nice outside bar, and we got to the open 2.5 minutes. We got a very nice outside bar just forming on the Euro New Zealand this morning. Yeah, so there's the wick. There's your inside bar. So big outside bar. This is a reversal pattern. Basically, they're clearing the decks for potentially a rally today. So we have got potential on the cards for this to be a bull day. So if you need to do any aggressive drawdown control on Euro New Zealand today, I would look at the next hour. It may not work, but this outside bars tend to be indecision. So you've got three different types of indecision candle. Whatever you have coming down as your last bar doesn't really matter. But you either get a doji, some kind of spinning top, or an outside bar, which is basically the market trying to rally up, failing, trying to rally down, failing. So the buyers and the sellers have met equilibrium. Therefore, the sellers have lost control, meaning that there's a high probability that the sellers will now start to unravel their positions and start taking profit and allow the buyers to move. Doesn't always mean that, but that is what indecision is. So this candle's about to close. It's an outside bar, obviously, on that previous candle. So a break of that high would indicate potentially a bull run today. So that's the only thing that's in drawdown on the 4-hour. Hourly, with 3% in drawdown. Hourly H1M5, 0.89 banked yesterday, 0.29 done in DD control this morning. Euro New Zealand, exactly the same story. That's the only thing that's in drawdown at the moment of any description. Right, so this is ADR reversals. Banked 0.16 yesterday, 0.87 done in drawdown control this morning. New Zealand dollar killing it at the minute. New Zealand dollar Swiss and the Euro New Zealand. This is exactly the same trade, basically. So we've got Euro New Zealand long. We've got New Zealand dollar Swiss short, meaning that we are double short New Zealand dollar and double long euro, because the euro and the Swiss move together. So the reason this is in so much drawdown at the moment, and this is a good example of exposure and over leveraging. The reason we're in that much drawdown at the moment, as you can see, both of those are pretty much in the same drawdown with pretty much the same amount of trades on, because they're pretty much the same pair. So what the EA has done is taken two identical trades when the market has moved in opposite directions, and obviously it's squeezed on both at the same time. Therefore, you've got 4% of drawdown roughly there, where you should have 0.42. Actually, 2.42. So that one's in a bit of drawdown at the moment. So yeah, nothing much yesterday. I'd say this week has been pretty crap because market hasn't gone anywhere, is it? DAX this morning, pre-market, you're just about to get your open there. There's your 5-minute and 15-minute pre-market are pretty much the same thing today. Whoops, that was a bit of a lag. So there's the outside bar. Look at that candle, how that candle's ended. Remember yesterday I said, somebody asked whether or not we wait for candle close or not. That's why you wait for candle close. When I was talking 2 minutes ago, this was down here, wasn't it? Yeah, look how it's closed. Spinning top. It was closing as a bearish engulfing, not anymore. That's why you wait for candle close. That's the market's actual hourly candle close, not where it was 2 minutes ago. Big difference. ORB on the 5-minute is long. On the pre-market 5.15 is long. Off we go, up into there. Very nice. So yeah, Euro New Zealand. Right, the EA has got, so this one here, Euro New Zealand. So this one here is the one that I took manually, this 0.85. Which is this one here. So remember I said yesterday, I'm going to take one because this here I was worried about the EA not getting into one because it was a little bit too close for that. It wasn't quite 3/4 of an ADR. So I took one manually and I said, if we get the EA taking a second entry for me, I'll get out of this one. So this one here is the EA taking it. So we did get that push down and that entry automatically with the EA. So this position here, I'm now doubled up on. So what I'm going to do is I'm just going to put a stop down there. Unfortunately, I'm going to have to take a loss on it if it does drop today, but I'll take a 0.4 loss on that because it's over leveraged, basically 2 positions too close. However, if it rallies, I will keep it on, obviously, and I'll move it to break even fairly quick. Right, so there's your DAX. DAX yesterday was just a mess. The whole thing's a mess. The DAX is just a mess. It's absolutely useless at the minute. So we're in this 20-day range. Still in this 20-day range. So Thursday, Friday, we had the bounce off the low, straight up to the high. Monday, sideways. Tuesday, V-shape. Wednesday, came back to where we were, dropped, came back to where we were. Yeah, so there's literally that much movement in 3 days. We're not going anywhere. So DAX today is exactly the same as it was yesterday when we started. So we looked at the open yesterday, somewhere around there. We're looking basically for this high, which is the high of last week. We're looking at yesterday's high and yesterday's low. So target to the downside is there. Failing that, 150 ADR. Target to the upside is yesterday's high and last week's high. So just bear those in mind. If you're going long, that's where you're going to start to meet some resistance. But yeah, it's just a sideways mess at the minute. Afternoon. Tom is coolish. Only coolish, not really cool. Just a bit cool. All right. Johannes, I asked my question wrong yesterday. At what stage can you apply a trailing stop, not a stop loss? What was the question? Remind me what the question was. Morning outro. I guess you've just made a load of money, haven't you? Well done. Done it the wrong way round again every time. There's your 5 minute, 15-minute pre-market opening range break. That's a 2-hour return this morning on the opening range breakout. Very nice. If you took that, good job. 5 minute, even better. Getting on for 3R. Not yet, meaning you're still in it and milking it. Good man. Morning, Freeman. Morning, Guna. Yeah, so what was your question, Johannes? At what stage can you apply a trailing stop? So if I understand you rightly, if you're talking about position trading, you talking about position trading? What are you talking about? But I'm going to assume you're talking about position trading. Right, on a trade that is in profit, when can you apply a trailing stop? I can't apply a trailing stop from the start. You can apply a trailing stop anytime you like, obviously, to a trade. But the way that I use trailing stop, so for example, right now, pound US dollar, I've got 3 positions on it. One of them is in $700 in profit on pound US dollar. Let's use that as an example. Actually, let's show you my terminal. Then I can actually show you the trade, can't I? Which would make more sense. So this is my pound. That's Euro New Zealand. This is my pound US dollar. Okay. Let's go in 15. All right, yeah. So this position up here is in $700 of profit. Okay, that's my break even. So you can see the trade's in profit. So what I tend to do with trailing stops is my target is going to be down here. So if I can hold this today and we get the US dollar, the pound rate, let's say, for example, something stupid. It comes out at 4.25 and the market goes, what the hell? We're expecting 4.75 and it absolutely collapses. I would stick a trailing stop on that of somewhere around about the last 15-minute candle, which is around about 200 points. And just get dragged along with it and let it take me out. So I put trailing stops on when I'm happy to get out of the trade. So at the moment, this is in $700 of profit. On this particular account, that's virtually nothing. This is a 250K account. So if it gets down to ADR, for example, if we have a big push down and then a big push down, I'd stick a trailing stop on that, because what I would like to do is get out on the next pullback, protect that money. And if it pushes back up to there, I'll add it on again. Yeah. So I only apply trailing stops when I'm happy to get out of the trade. That's literally all I do. When you apply a trailing stop, you are going to get stopped out. There is 100% guarantee, because you have just put an order on this trade to say, get me out on the next bull candle. There's going to be a bull candle. Look at it. Bull, bull, bear, out. Bull, bear, out. Bull, bull, bear, out. Yeah, whenever you stick a trailing stop on a trade, as soon as you get a candle back in the opposite direction, 90% of the time, it's going to stop you out. So what you're saying is, I'm happy to take the profit right now, but if it goes and manages to get another 2 or 3 candles, or something happens and I get maybe 3 or 4 candles out of it, fantastic. But if the next candle's bullish, I'm off. Yeah, that's how you use trading stops. That's how I use trading stops. If you put a trading stop on it, for example, now I said, right, I'm going to put a trading stop on it that far away. So I'm going to lock in that much profit. What do you think I'm going to get? That much profit. I know. Because at some point, this thing's going to hit some support resistance. It's going to come back and test that. It's going to wick up into there, and then it's going to drop down to there. It's going to stop me out. Stop loss stops profit, because you're telling the market to exit your position. It's exactly the same as you pressing the close button right now and going like that and hitting close, except you're saying, you do it for me, the next candle. Because it's highly unlikely when you see something that's in profit that it's not going to pull back. Because that's what the market does, doesn't it? It pushes up, it pulls back, it pushes up, it pulls back, pushes up, pulls back. So when a trailer is activated, you get out on the next push. And if that's from exactly where you are now, what you're doing is, instead of getting out there, you're getting out there and losing a bit of profit. I think that's what you mean. That's what I understand from the question. But if it's something else, let me know. Morning, Danny. Outro, 1R locked. Good man. That's the Dow. Let's not look at that. So there's your 5-minute opening range. So you are long on the 5-minute ORB on the DAX. Not a lot of movement on this. Whoops. Today. So upside, you've got, from where we are now, potentially 37 to 60 pips. So somewhere between 40 to 60 pips to the upside available to you. But remember, we've still got the gap fill to do to the downside. Yeah, so that's looming. We got the US PPI this afternoon as well. So, oh, that pound US dollar is coming down beautifully. Right, there you go. So I've got a trailing stop on. Look. See my trailer? So that trailer that's moving down there is actually on this position here. And that position, I think. I think they've both got trailers on, haven't they? Oh no, just one. Why did I put one on that one? On that one? Remember why? Yeah, so I'm not going to trail this. I'm trying to hold this pound US dollar for the news, and then I will get out of some at the news. But this is a good support potentially on this one. So we're coming down to yesterday's low, so there is potential for a bounce down here. Right, let's have a look at what we're doing today then. So, oh, look at that. Perfect timing. ADR, Aussie dollar, US dollar. So I was just going to say there are no ADRs today. There is one. Closed out phase 2 challenge passed. Good man. 86p over target. That's cutting it fine. I've done that before. Outro. Do you know what? I didn't pass the challenge. Why? Because I forgot to take into account commission on the round trip. So yeah, hopefully you've taken the commission into account on that. But well done. phase 2 passed. Good job. And was that mainly with the ORB EA, most of that. Still rallying. Nice breakout potentially this morning. Morning, Anna. Can someone tell me what happened with the Euro US dollar? We'll have a look at that. We'll do our ADRs in a minute. So US dollar's rallying hard at the minute. Purely just opening range breakouts. Good one. And you're using the 5-minute pre-market. I'm going to have to test that more. Good job. Opening range breakout, EA passing evaluation. That's what I like to hear. So Euro US dollar, basically, the US dollar is rallying this morning at the moment. So remember I said yesterday, the move that we had, whoops, wrong one. The move that we had on the US dollar, that weakness on the US dollar on those inflation figures yesterday, I said in my essay in here, that's not the move. That shouldn't be weak. That should be bullish for the US. So I would expect an A-shaped recovery and return to source on all of those moves. Some of them did it yesterday. The pound US dollar did it straight away yesterday. So we basically went straight up, straight back down again. And now it's coming down this morning. And a lot of the others basically came up and they started to push back down. US dollar, we should be getting a little bit of strength coming through, which means potentially positive indexes. So we might get a breakout on the indices as well today. But I don't think it's going to be sustained strength, especially on something like the Euro US dollar, because the Euro's dropped uncharacteristically on its inflation and interest rate rises. So the last interest rate rise that we had last week, we dropped for days. That's not right either for the Euro. They over-factored in the rise on the Euro to be potentially 4 instead of 3.75. So they scaled out of some of that extra that they put in there. That, I think, is ready to go now. The Euro should start to rally now. The US dollar, I think, should have been stronger yesterday than it was. And I think today will probably get undone. So what they've done is they've enticed everybody long in there. And what they've done this morning is kill everybody. Yeah. Yeah. So look at this. A triple bottom bounce. Everybody and their wife is long on that at the moment. And now they're not. They're dead. So that move yesterday wasn't the right move. So I think we're going to get some sustained dropping on everything against the US dollar, but not for long. So this US dollar, I think now we are literally going to go into a sideways kind of move on it and potentially start to weaken. So it's difficult to call weakness on the US dollar, but they tend to screw things up royally quite often. So it does happen. So I think bullish on Euro US dollar, but at the moment, a little bit bearish. We've got no news out the Eurozone for a couple of weeks now. And we're coming down to low of range here. So there is potential for this to be a bounce point. Look, we've got this old weekly support. We've got this old resistance on the monthly, which we're testing at the moment. We've just broken out of that weekly low. So I suspect we're going to get a 125 ADR on this today, but more than likely, I think we're going to come back down here and test last month's low. But that's probably it. Then I think we're probably just going to do that. It depends how quickly they power up the euro. If we get any problems with banking, then obviously the Swiss franc is going to power up, which will drag the euro with it. So we'll get some movement that way. But we'll see. But yeah, but that's why it's dropping. We just got some US dollar strength coming through, which leads me nicely onto ADRs. We've got that one ADR. So we had 3 ADRs yesterday. The first time this week. We've had no ADRs all week apart from yesterday, only 3 of them, and they only hit 100 ADR. So nothing really moved yesterday either. Aussie US is the only thing that we've got hit today. So 15-minute or 5-minute rather. There's your hit at ADR. Just had a reversal alert on the 15-minute. It's ugly. So it's not a brilliant level here. We've just filled this propulsion gap. We've got this tiny little one here and this old one here, which is the big one down there. So continuation strength on that US is going to drive this down today. PPI figures this afternoon. If the PPI figures come out as positive this afternoon, this could be a 200 ADR day as well. And bear in mind, we're going to get movement on the US dollar as the rates come out on the pound as well, because they will either be dumping money into or out of the pound at 12 o'clock and 12:30 today. And if they're going to do that, they're going to need to use other currencies to do that with. And US dollar being the big currency is the one that's going to get moved as well. So there's a lot of movement potentially today across the board, especially US dollar and pound. So I would hold on to any US dollar, anything you got short against the US dollar, or anything you've got US dollar long at the moment, because this has got potential today for 200 ADR. That brings it back down into here. So Aussie dollar, US dollar, be careful with ADR reversals. This is now a propulsion gap in the making. We've got 45 minutes left on this candle, but this is going to turn into a very nice size propulsion gap, which they will trade back up into at some point. So it could be straight away. It could be later. They could come down here first. This is near as damn it filled, this one here. So I'd question as to whether or not there's a reason to come back down to this area. There is potential for them just to come down and do this and then potentially pull back up into here. So we'll see. But the support is here. Yeah, that's the support resistance area. So that's 150 ADR. So 150 ADR. So again, trailing stops, talking about trailing stops. If I was short on this now and we got to here, that is where I would apply my trailing stop. Yeah. So I would jump down to M15 or M5 and I would go, let's say we've sort of just done this and done that, and we've got all the way down to 150 ADR. I would put my trailing stop at the back of that candle. So when that candle closes there, I would look at where the high of that candle is, and that's what I would do. I would just apply a trailing stop there. So if we're going to get a reaction off of this support and it's going to go straight into a bull candle, get me out. If you are going to take a run up at this and slam through it and drop down to this next one and do another quarter of an ADR, take me with you. So just your maximum, you're letting those winners run, but you're fully expected to get stopped out quickly. It just means you don't have to worry about it. You don't have to watch it. You just basically stick a trailer on and say, screw it. Just get me out when you're ready. Check. Aussie Swiss is starting to work as well. So a little bit of strength coming through, potentially on the Swiss franc. But this is probably weakness on the Aussie. Yeah. Australian dollar coming down a little bit more this morning. So these New Zealand pairs that have been squeezing, look, all starting to unravel now. Yeah. All this strength that we've had on the euro. So the euro New Zealand, yeah, there's our pop starting. So there's that outside bar that I just spoke about at the beginning of the session. There's the break of the outside bar. So when we get that reverse alert on the 1 hour chart, that's our target today. Obviously, my target is way up there somewhere, but there's a long way to go on this. You know, this, we're looking for a profit take on this, which you're looking at least a 38 retracement. 38 retracement on the move is going to bring you back up to here. My average is here. So that would be the minimum, this propulsion gap here, this accumulation. That is the minimum I would expect us to get to on the pullback, which is 175 ADR from where we are. Got to be patient. So that is your only ADR today. DAX is struggling at the moment up here. We're not actually managing to make any progress. I wouldn't expect a massive move this morning because of the pound rates. I think the market's going to be was normally fairly quiet ahead of a rate announcement. So we might find that we're not going to make a lot of progress today. So if you're on the 5-minute opening range, you might find you just get whipped around and a little bit stagnant today, but we'll watch it and see what happens. RSIs. Morning, Amar. Morning, Dreska. JMO, I think there are the smart money people. Yeah, so all the smart money people, you're talking about that stop run we just looked at, yeah. That's the smart money people getting stopped because they're smart. They use stops. Euro CAD looks due for a long. Yeah, all euros are, everything euro basically is a long at the moment. So Euro CAD I'm in one. Am I not in two? Not far enough. Bear with me a sec. 119. Calculator gone. There it is. I'm not going to get an entry on that. I'm going to stick a pending order on this. That position 72. So I'm just taking a manual on this. I'm not taking a manual. I'm putting a buy stop in place. That was a delay. Just above that reversal alert there, because the EA is going to get me in 89 pips apart, which is here. The reversal alert is 78, but looking at it, this is close enough for me there. As a distance, I'd be happy with that. It's pretty much 3/4 of an ADR. Half an ADR is 60. ADR is 119. So I'm going to take a manual off of this in the assumption that this is the peak formation low. And we're basically just putting in that low, higher low. We're going to go for a higher high and start that rally. So propulsion gaps filled to the downside there on M5 hourly. We got these three massive propulsion gap targets to the upside, and that which will act as potential resistance. So all the propulsion gaps to the downside are done. We have got this weekly low. So yesterday's low, and this weekly low. If they come back down and test this weekly low, which is 3 weeks ago, the EA will get me in automatically, so I won't need that position. But if they are going to put that in as their peak formation low, they're not going to test that area because this propulsion gap is filled now and there's no reason really to go any lower. What I don't want to do is get stuck for 2 to 3 days back up to break even as we come back into this propulsion gap. I'd rather get another position on, bring the average down and get myself out as an exit in there. Just because this is just such a cataclysmic move, I fully expect the pullback on it up into there somewhere, looking for at least a 38 retracement into that, but it's just slightly out timing wise. That looks good. Euro CAD. Outro. Crazy to think I've been paying for courses for a good few years, and the strategy I've had the most success with, I found of a legend on YouTube for free. I wouldn't quite class. To be a legend, don't you have to have been around for a long time and pretty much be dead? Michael, morning. How are we doing? Right. So that's ADRs. There is only one ADR. That's it. RSIs, it's all the same stuff as yesterday. We've got a few extras coming in with the New Zealand dollars now, but Euro New Zealand is the main one. There's no hourlies apart from Euro New Zealand. So this is your hourlies on the right. This is your 4 hourlies on the left. So the RSI extension on Euro New Zealand on the hourly is just extended below the 70. It's just coming out now. But as you can see, this was the big extension there. I got into initial entry there and out. So that was a nice, easy one. Second entry was there. And since that second entry, we've literally just got embedded below the 40 level. So we've just been sitting down here embedded and just squeezed down for a week, basically. So got 4 positions on this. One of that is manual, obviously. So, well, I'll deal with that at a later stage. In fact, there's a good example of a trailer. Look. So when that gets into profit, I will start trailing this. What have we got? 690. So let's say we get back to break even, 540. So I'm going to put a 540 trailer on it. There we go. So that will start to trail when this position gets back to break even, this will start to trail, so it'll break even, stop it. So if it does pull back down again, I'm out of that, got rid of it. So yeah, Euro New Zealand massively extended. You can see from the hourly here. We've been coming down since the Wednesday from 2 weeks ago, basically. So this is a 2-week solid drop, nothing but one flag in the middle of it. This is going to be potentially a complete reversal of this move. I wouldn't hold it that long myself, but obviously there's propulsion gap targets galore to the upside on it. We still have got these hanging over us down here to the downside, which makes it difficult to sort of anticipate which way they're going to go with it. I can't see why the euro is quite so weak, apart from the fact we've had a decent New Zealand dollar strength, and obviously they overreacted to the euro rate. So one of two things is going to play out here. We're either going to come back up into this area here. Yeah, and we're going to test that and continue back down to these lows down here, or we're going to just go into some kind of accumulation break down into there and then come back up in to test that later. So it's either going to do that and that, or it's going to do that and that. The other option is that this move here, this pullback, is basically just a pullback to the 72 moving average on the daily. And we're going to continue that push up on the Euro New Zealand. So if you look at the 72, look at the daily time frame, this is a 72 moving average pullback, basically. So we're going to do something like this. There's your low, high, higher low, mark about, push, new high, higher low, push. Yeah, so that's your market structure. So there is an argument for coming back down to test this area and then rallying, but it could go from here. It could go from anywhere. We never know where it's going to go from. That's the whole point of position trading. You don't have to know where it's going to go from. You just have to be in it when it goes. That's it. So we're just waiting for that one to pull its finger out, really. Hugely embedded below the 20. We don't get down here. This is rare, getting anywhere near this level. So last time we were down here, we did put another leg in, as you can see. We weren't quite as low as we are now. So it's akin to this there. So there is potential, as I say, for that sort of movement, and then a potential leg down. I don't care if it does that, fine, I'm out. But that's what I'm expecting. So that's Euro New Zealand. Euro yen is also extended on the 4 hour. So there's a big drop down there. The yen pairs obviously had a big rally yesterday. Bit of strength coming through across the board on the yen. If you look at yesterday's charts, yeah, we had nice down days yesterday on the yens, all the way everywhere. So Euro yen, we are just coming out of an extension on the hourly. We're just coming back into it again. So there is potential on this one for a nice bounce as well. So this is back down in the 24.72 area where we get nice bounces. The yen, I don't think there's any imminent danger of a rally. It will, it's a strong currency when it wants to be, but the euro has every reason to go up further on interest rate rises, which are all planned and all coming out, and we know about them. It's just that there was a little bit too much of an overreaction to that move from last week. So this is just a pullback, temporary move, basically, I think, on a new long. So right now, exactly where you want to start building a position on the 4 hour. So the 4 hour will be in this already, I think, euro yen. No, got no yen on at all. Yeah, not in it yet, but will be soon. So there's a nice entry on that one. Pound New Zealand, 4 hour RSI extension. That's just starting to go. So pound, obviously, you be careful with the pound today. Yeah, I mean, it looks like a beautiful long. This is a lovely area, 24.72 area. The pound is going to increase its interest rates. The New Zealand, we've got news coming out tomorrow morning. So tomorrow we've got the inflation expectations, which is basically their dumbed down version of CPI. So it's an important number. But the fundamentals on the New Zealand dollar, if you look at where they are with the interest rates at the moment, 5.25, it's going to be quite tricky for them to increase interest rates anymore. So again, same as the US dollar, we're probably going to see the New Zealand dollar going like that or like that. So more inclined for that to start to drop. The last interest rate rise they had was 0.5. They can't sustain that. They're going to have all sorts of trouble with unemployment if they carry on at that rate, but they are still high on inflation. So New Zealanders are in a pretty of a sticky situation at the moment. Pound, I think we've got another couple of rate rises ahead of us. So certainly think the pound should be bullish against New Zealand. So this is a good spot to start buying it. You've had the reversal alert this morning on M15 and on M5. There's your M5. Whoops, sorry, there. And retest. There's your reversal alert and retest. We dropped down a little bit lower, pushed up. And M15. There's your reversal alert and retest. Nice W pattern reversal. At least pushing back up into there, but probably challenging those highs and off further. So that looks good. New Zealand dollar Swiss. DAX has just retested that propulsion. Looks like it's going for another run up to the highs. So another breakout on M5 has just taken place. So New Zealand dollar Swiss is extended on the 4 hour. Big, strong push up to the 72. So again, all these, these are all inverse. These New Zealand dollars, we'll be looking for them to do the opposite. This is in a nice downtrend at the moment. The Swiss franc has been weak because of the euro. The New Zealand dollar's had some strength. New Zealand dollar is starting to flatten out and weaken. We're expecting euro strength, which will drag the Swiss franc with it, meaning New Zealand dollar Swiss coming down. So, yeah, looks good for shorts. Exactly where it is. Extended, ready to go. Haven't had a profit take move on this entire push there, which is quite a big move. It's 188, which is 3 ADR. So 3 ADR, no profit take. Ready for a pullback on that one. Good targets to the downside on the hourly. Big target there, target there, target there. Got that unfilled one, which got tested once, although that's not really a test. That's an overnight candle, so you can ignore that. This has been held up multiple times. That's an overnight candle as well. You can ignore that. So, yeah, nothing but downside targets. All upside targets filled. Yeah, so that propulsion gap there was the last one at that resistance. That's just been filled as well. So we've got these little ones up here, but we've now got way more targets to the downside. So there's one or two things that's going to happen. Same thing as usual. We're either going to push up into there and then come down, or we're going to come down and sort some of this out and then push up into there. We don't know whether the structure is going to be like that or the structure is going to be like that. One of those two is going to play out. Take your pick. But right now it's extended on the 4 hour. So more likely we're going to start a downward move. New Zealand dollar, US dollar. That's up at a monthly support, which is really nice. Monthly resistance, rather. It's already played out. You missed it. New Zealand dollar, US dollar. So that was your resistance bounce. Absolute spot on monthly resistance. Bang. Looking for that to come down. So this is very range bound, you can see. So with these two now, both of them have got 5.25 interest rates. Yeah. There's no advantage in putting your money in either of these sideways. So there's no reason why this shouldn't remain sideways. You can see the bigger ranges here. You've got kind of that range there, and then you've got this range here forming. So it's either that or it's that. But right now, if you get in short here, so I'm in short now. You can see the red line there. So I'm short here with one on the H1 M5 strategy. So if it pushes up, we've got a propulsion gap to the upside to help us. And then we've got this old high here, which is another monthly high from 3 months ago. That's a 3 month ago high there. So entry is here. Second entry would be there. Might take a third, possibly a fourth. if it was to manage to squeeze all the way up to there without doing a profit take move. Highly unlikely. So nice extended, so that looks good. New Zealand US, but you've missed it if you're not in it already. The reversal was this morning there when they took out that high. There you go. So that is your RSIs. Not a lot else this morning on the RSIs. David, the term legend has become somewhat loose in recent times. There's too many legends out there. Just a couple of nights ago, my local, a young lad returned to his table of young lads holding 3 pints, was described as a legend. Yeah. Young people managing to get into the pub and buy a pint, I think, at the moment in the economic climate that we're in, is pretty much of a legend, isn't it? If you can afford to go to the pub and buy 3 pints, you're a legend because you've actually got enough money to be able to go out. Pretty good achievement, I'd say. Pound New Zealand is in a similar situation. Yeah, so Euro New Zealand and Pound New Zealand, if you look at these two, you're going to find they're very, very similar. The Euro and the pound move fairly similarly because they're close trade partners. The New Zealand dollar obviously has moved, obviously pretty much the same with both of them. So yeah, both in decent spots. Pound New Zealand, long opportunity. So the Euro is just more extended. The Euro is only more extended because last Thursday we had the interest rate rise come out as expected, and we had a bigger than expected drop on it because I think the market factored too much in. Otherwise, we'd be sitting there looking at these two being pretty much the same. So this has just suffered. The euro suffered more because of the interest rates last week. And obviously today we've got the pound. So the pound at the moment could go either way. So the market, we haven't had a lot of guidance. Financial markets have calmed down for now. Yeah. We haven't had a lot of guidance on the pound from the Bank of England. So the market, I don't think, has factored in anything different than 4.5, which is what we've been told we were going to get. So 0.25% increase is pretty standard. We had a freeze on our rates last time, and our interest rates still haven't got below, inflation hasn't got below 10. We were expecting this to come down to 9.7, I think it was. We didn't get it. So they have no choice. They have to put this up. At the moment, we're teetering on the edge of a banking problem. And we're also teetering on the edge of a potential housing market contraction. So they've got to be very, very, very careful what they do with this, because if they put this up by more than 0.25% at a time moving forward, that's going to strangulate the housing market, and that isn't going to be good. So, and obviously with unemployment as well, that's going up because interest rates go up. Interest rates, every time everything goes up over here, it has a negative impact on business. Businesses start to shed overheads. Overheads typically are people. People make unemployment go up. Unemployment going up drives inflation up, which means you've got to put that up higher, which drives that up higher. And it just is a never-ending spiral of death, which is very, very, very difficult to get out of. So they've got to be very careful. I don't think we're going to get anything above 4.25 today. So the pound today has the potential to drop because we're going to get an as expected result, which is going to go up to 4.5. Sorry, did I say 4.25? I think I said 4.25 a minute ago. Going to go up to 4.5. So when we get that, one of two things is going to happen. The market is either going to factor in a 2.25 increase next time, and we're going to get a little bit more bullish on the pound, or Bailey's going to come out and say, we're approaching where we think we will be able to get on top of inflation. However, inflation isn't coming down. Therefore, we need to be careful. And it's probably going to be woolly, one of those, we'd love to not do it anymore, but it's all going to be data driven. And if this does that, that does the other, then blah, 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 which is what we usually get from the Fed and from the Bank of England. I get the feeling we're probably going to get a little bit more of a bullish move than a bearish move today, but it could go either way. So anything you're in pound wise, just bear in mind there is a possibility that it's going to go against you. So again, like the position I've got on at the moment, which I just showed you on the Fidelcrest account, I've got $1,200 in profit on the pound at the moment. That will be banked, or it will have a tight trailer put on it ahead of the news. What I usually do is put a tight trailer on. So again, talking about trailing stops, when that news comes out this afternoon, let's say, for example, we're here and we're 5 minutes ahead of the news. What I would this is going to spread ridiculously. Yeah. So what I tend to do is I put a trailer on it, which is fairly decent, in the hope that what will happen is it will just go bang and it will collapse. And if that happens, I put it far enough away that hopefully I don't get taken out on the spread before the drop does, and then I can make an absolute fortune. If, however, it flies back the other way, I want to be out because there's a potential that I'm going to go into drawdown on them. So I want to bank as much as I can. But if you don't bank it ahead of the news, the spread and the slippage could knock off 20 to 30% of the profit you've got open. So it's your choice as to what you do. And it depends, again, on how your day, week, month is going. If you're thinking, I'm not doing particularly well today, I've got an opportunity to bank, like, for example, I'm 0.29 down. If I had an opportunity to bank 0.7% right now, probably do it. If I was sitting in 1.2% today, I'd probably think, screw it, let's stick a trailer on it and see if we can get a gamble. It's either going to go or it's not. So you make the choice. But bear in mind, any pounds you get in today or any pound that you've got open in profit, it's going to go nuts. So just be careful. We don't know which way this is going to go. It could go either way today. If you look at all the pound pairs, they're all pretty much middling. Yeah, we haven't gone anywhere really for 3 days. They cleared the decks to the upside yesterday. Today, they've cleared the decks to the downside. So anybody, if you look at this, this is a brilliant example. That's the high of the week. Gone. That's the low of the week. Gone. That's probably what they're going to do. And then they've got all liquidity from both directions from every trade entered so far this week on a long or short that's using a stop loss. They're all gone. So they've cleared the decks basically, which means that they can take it wherever the hell they like. And it's going to depend on which way the books are balanced, basically. So we'll see. It could go either way. So look at all the pounds. Pound New Zealand, that's coming down. That's extended, so that's more likely to pop. Again, bullish pound. Pound yen, more to the downside, more inclined to see a pop. Pound Swiss, gone absolutely nowhere this week. Again, just taking out the low there. So more inclined to pop. Pound CAD, absolutely sideways all week. Look how contracted that is. That's your high of the week, and there's your low of the week. Super tiny. 105 ADR on this. The weekly range so far is 75. We haven't even done, so all week, we haven't even done a daily range all week. It's just absolutely dead. So, yeah, just be careful with these pounds. I think there's much more opportunity for an upside than downside, but we'll see. Who knows? Flip a coin. Morning, Ike. Hola, Parkel, Eurostella, Banjo, Tonto. I've no idea what you're talking about. I don't know what that means. Let's find out. What? Come on, Google. You're cleverer than that, surely. Hi, why did the euro US dollar drop so much? Because the US dollar's rallying. US dollar's just bullish. Lee is a legend, but he is not old or near dead. I hope not. If I carry on spinning the way I am, though, probably will be. Please analyze Dixie. Don't do the Dixie. Dixie's euro US dollar upside down. So there you go. That is the Dixie. So at the moment, the Dixie is rallying, and you have resistance on the Dixie coming up shortly. Why do you need to analyze the Dixie? I don't see the point. I'd trade Forex. You can't trade the Dixie. The Dixie's just the dollar index. The dollar index has got nothing to do with the movement of other currencies because there's two parties involved. So if you watch the Dixie, all you're doing is you're looking at what the US dollar's up to. That doesn't tell you how it's going to move against the other currencies because these guys also have movement. Not really much advantage to watching the Dixie. I used to, but don't really do it anymore. Right. That's all I've got this morning, unless there's any other pairs anyone wants to look at. So we're just coming up. This is the previous day's high. This is yesterday's high. We're just coming up to retest. I must get those labeled. I might change the indicator to label those. So previous day's high there. And that's yesterday's high. So challenge on yesterday's high and last week's high. As I said this morning, those are the levels I'll be watching today to the upside. I don't think we're going to get a break of the highs. Depends really what happens with the figures this afternoon. If we get really strong PPI figures this afternoon, this is the producer price index rather than the consumer price index. So it's exactly the same as CPI. It's just the kind of commercial version, if you like. If that is going up, we will get a rally on the US. And if the unemployment figures come out as a negative because we're forecasting a positive, we're going to get a rally. So there is potential for all the indices to actually try and attempt to break out today, but we'll see. Gold. Bella. I'm going to put it on. I haven't put it on for ages, have I? My gold, my bling. I won't be able to get it off now. Bling. It's got diamonds in it as well, you know this. High quality. Right, bit of gold. Let's forecast it. It's coming down because the dollar's going up. Well, it's not actually doing a lot, is it, really? We're still where we were yesterday, so we got a massive whipsaw there, and no progress. So this thing's gone, you know, this is why exactly this chart explains exactly why I don't trade gold, because it's just a crazy up, not going to do anything for ages. Then I'm going to go mental, then I'm not going to do anything for ages. Then I'm going to go mental, then I'm not going to do anything for ages. Then I'm going to go mental, and then I'm not going to do anything. You can't trade that. Just, it does whatever the hell it wants. So right now, it's bang in the middle of RSI on the hourly, and the 4 hourly is bang in the middle of RSI. It's in the middle of a range. It's just doing absolutely nothing. So gold has got the potential to go flat, and the same as the Dixie has got potential to go flat, because the US dollar has got potential to go flat. And obviously this is just a US dollar cross. So the only time you're going to get movement on gold is if we have a safe haven run, in which case then gold is going to rally. So at the moment, it's going to be quite tricky, I think, to trade gold, because I don't think you're going to get much movement on it, apart from the craziness, which is just them manipulating it to do whatever the hell they want. Russia's still got loads of gold. We've still got an export ban on Russian gold. Therefore, we've got a supply problem. So you would expect gold to be pushing up in price. But right now where we are, it's in an uptrend. So I'd be looking more for longs than shorts. Here's my analysis on gold. I can't really analyze it because there's no opportunities. Look at the RSI on gold. Same as everything else. Sell it. Sell it. Buy it. Buy it. Sell it. Buy it. Sell it. Rinse, repeat. It's the same as any FX pair. It's just more scary and volatile, which is why I don't like it. Oil we haven't looked at. So yesterday we didn't get anywhere on oil. I really want this to be the peak formation low on this thing, but we're now 4 days sideways. We had the oil inventories come out yesterday, and as usual, did nothing, just a little bit of whippy rubbish. So we're exactly where we were on this. It's not really going anywhere at the moment. So when we get these little stagnation periods on oil, you tend to find you've got a big move coming in one direction or the other. Your trendline traders will be shorting the crap out of it at the moment. Your market structure traders will be buying the crap out of it at the moment. Who's going to win? Don't know. The forecasts are still the same. I haven't seen any revised forecast from anybody. It's still $95 a barrel this year. So it's still a buy. This is a beautiful market structure. Propulsion gap fill, bounce all the way up into here. And then when we get up into there, we'll see what sort of movement we need to try and attempt a break on these highs. So I still like it long. However, there's every opportunity we can get a push back down into this area. And then that will entice everybody to go short. And then they can run it. I guess. I don't know. Oil's just not going anywhere at the minute. Very, very tricky. Still rallying on the DAX. Not far to go now till yesterday's high. 22 pips. Would you consider a long on the pound New Zealand ahead of the news? Up to you. Yeah, tricky one. That. If you're going to take it, all I would say is it's a good stop loss trade. Look at the targets to the upside and look at the amount of pullback we've had. So it's been very, very orderly, this market structure. So it's low, high, low, high, low, high, low, high, low. That is the danger. But there is also that possibility. So if you're going to position trade it and you're going to take an entry there, you're either going to be out today straight away, or you're going to be straight into drawdown today and taking a second position. So as long as you're aware of what can possibly happen, I like this monthly low here. So 175 ADR, what will probably happen is you would get into a position here and this thing's going to scream down like this, and you're not even going to get a reversal alert until somewhere around 175 ADR. So what you're going to do is you're going to be stuck in a position where you've got two entries on which are 175 ADR apart instead of 3/4 or half or an ADR apart. So it's just going to be one of those that you're going to have to wait a little bit longer to get out of, possibly. But we don't know. It's the same as any trade. If you take this with a stop loss, the risk reward on it on a 150 to 200 ADR move, which is quite often what we can get off an interest rate announcement, is massive. If you take it as a position trade, what I would do is I would probably take it manually and I wouldn't use the EA. Don't put a TP on it. See how much it can get. Basically, you're trading news, aren't you? So I'm in pound US dollar short. I'm in pound Swiss short. I will be protecting that pound Swiss short, and I will be out of the pound US dollar probably. I mean, it's getting close to probably hitting ADR before the news, pound US dollar. We got this low coming up here. So we got that area of support at 100 ADR. So if we get 100 ADR, I will probably just bank the whole lot of that. It's sitting in 0.5% profit at the minute. I just don't want that 0.5% profit to vanish. So I'll be out. And the pound Swiss, I'll probably go flat on or put a little stop on it. Pound Swiss, I'm literally sitting in 0.02 of drawdown and $42 in drawdown on it. It's nothing. Break even, basically. Exactly, it's this trade. It's exactly this trade. There you go. It's the H1 M5, which I took. There you go. So I've got that on also on the funded account. So absolutely fine. I'd be worried about that. So I might, I'm going to let the EA just trade it because it'll either work or it won't. But yeah, I don't know. Up to you. Can't really answer that question. I wouldn't take a pound. If I was going to trade, if I was trading manually, I wouldn't take one on the pound New Zealand right now because it's too high risk. You have a 50-50 shot of going into massive drawdown or massive profit. You make a decision. It's one or the other, isn't it? Tim, I'm short 4 positions on silver. I haven't even got silver. This will be interesting. Never looked at silver. You're short 4 positions on silver. Going to take top 2 positions off on this pullback coming up to support. Any input, and this would be helpful, as I've been hit in it for ages. I've been in it for ages. Maybe magic silver ball. Hang on, let's... no, that's the wrong one. There we go. This is gold, basically. Pretty much, isn't it? Yeah. So look at gold, look at silver. There's not a lot in it. So I would question why you're in silver instead of gold. Gold's got an ADR of 314. Silver's got an ADR of 63. So you're probably better off being in gold. But don't know. We're out of that support into this propulsion. So when you get to ADR on this, back down into here, this looks remarkably like the DAX, doesn't it? Look at this. And then look at the DAX. Except the DAX is rallying, obviously, and silver's coming down. But yeah, I'd get if you got 2 positions you can take off, and you're not at break even on it. If this US dollar is going to continue to rally, the pound US dollar is still coming down hard. So if this US dollar is going to continue to rally, I don't see any reason why you shouldn't get a 150 ADR out of this today. Don't forget you got the PPI figures this afternoon as well. If you get a positive PPI, this thing's going to come down because it's a cross with the US dollar, same way as gold is a cross with the US dollar. The US dollar rallies this afternoon, silver's coming down. So this is where I would look to get out if you can. And assume we're going to stay range bound. We're going to get a rally on the US down to 150, then they're going to do a profit take. That's where they're going to do it. Somewhere down there. Pound US dollar is still coming down very hard. We're getting towards ADR on this. New Zealand dollar as well is coming down hard. Euro pound is pushing. Pound is coming down ahead of the news. Is it a trap? We'll find out. Euro New Zealand is starting to move as well. So reversal, we've got 33 seconds on this hourly candle. We're just about to get a reversal alert. It's going to be close. We're just about to get a reversal alert on Euro New Zealand. There you go. So that's that reversal candle I was talking about, the outside bar. Outside bar reversal. 10 seconds. Can it hold it? Can it hold it? It'll be tight. 3, 2, 1. Reversal. There we go. There's your reversal on Euro New Zealand. So potential bullish move starting on Euro New Zealand if you're in it. So if you want to get in an aggressive position, that is it. So watch this low. Obviously, there is a possibility of them taking that out, but retest now. A little bit of a push, retest, and off. Looking good. Well, I'll be a monkey's uncle. Fidel says no trading the pound, but the US dollar, no problem. Really? So you're allowed to trade PPI and unemployment. Where are we? My God. This is ridiculous, isn't it? So you can't trade red news. So you can trade red news. So you can't trade the. I can understand. Obviously, yes. Interest rate rises. Definitely, you shouldn't be news trading. You shouldn't be trading around that. But PPI figures are basically CPI. It's big news. Unemployment, big news. These are the leading indicators that drive inflation. They just got it wrong, haven't they? They've got it all wrong. It is. It's like a trap. GDP, I can understand. Michigan sentiment, I mean, that's a load of rubbish. There's some other news tomorrow, isn't there? So you can trade the CPI for the New Zealand dollar. Look, they're also allowing you to trade through CPI for New Zealand. I'm so excited about the non-defense capital goods orders excluding aircraft. I can't wait for that. I'm going to do a special video on the 26th of May, and we're going to trade live the non-defense capital goods orders excluding aircraft, because apparently this is one of the leading drivers of the FX market for the US dollar. So I think I need to do a special stream for that, because we're expecting a massive move. So you cannot trade for it. Be very, very careful on that day. Cuckoo. Literally living in cloud cuckoo land, aren't they? You need not question why I'm in silver rather than gold. I'm in both. Okay. Yeah, so basically, if you're in both, you are obviously, you're aware that you are doubling your exposure. So just trade one or the other. Gold's the one with the volume. So, but as you can see, the price action is very similar on both of those. So gold's got the ADR, so the gold's the one you really want to be in. But obviously silver, platinum as well.